Tax strategy in down stock markets for retirement accounts. Hi, my name is Joe Cantu. So if your retirement IRA stock account has a low value, consider a Roth IRA conversion. By converting at a lower value, it triggers lower taxes. What are eligible accounts? Traditional IRAs, Sep IRAs, simple IRAs, 401ks, 403bs, and 457 plans. However, in many cases on these 401ks, they have to be rolled over into an IRA before you can do the Roth conversion. But there are planned exceptions. In my opinion, it's smarter to convert the stock without selling it because the account may rebound. Journal it. And you have choices on withholding money to send to the IRS, for example, say 10%. But the disadvantage, it prevents the opportunity for having the maximum amount of future growth in your Roth IRA account. So it may make more sense to pay the taxes out of your pocket. So check with your tax advisor. It might make sense to pay quarterly IRS contributions to the IRS. Again, check with your tax advisor. Finally, Congress wants to eliminate Roth IRAs. Why? Because the growth and distribution in the account is completely tax-free. The Roth account began in 1997. Check with your tax advisor, but I believe there are no income limits and anyone can do a Roth conversion here in 2025. I have some disclosures. Any representation of stocks are for educational and entertainment purposes only and do not constitute a recommendation. I do not provide tax or legal advice. Investing has risk of loss. You may lose money in the stock market, and consult with your own advisors for any financial decisions. Joe Cantu is a registered investment advisor in the states of California, Florida, Georgia, and Texas, providing pure independent advice and money management.